What's going on, traders? Welcome back to another great video here in Boiler Room Trading. What we're going to do today is talk about the difference between exponential moving averages and the difference between simple moving averages. So if you're newer to trading, this video is really going to help you identify the difference between exponential moving averages and simple moving averages. In this video, we're going to go into how to set up your exponential moving averages, how to set up your simple moving averages, using a platform known as TD Ameritrade's Thinkorswim. This is mostly one of the most common trading platforms. That's specifically why I use it. A lot of you guys use it. So in this video, I'm going to go through and show you how to set up your exponential and simple moving averages and the meaning behind them and the difference between the two. So if you already know how to do this, this video is really going to be of no use to you. But if you don't know how to do this, then you might as well stick around because it's going to be of use to you. All right, so let's focus here on the screen. All right, so ideally, the first thing you do when you open up TD Ameritrade's Thinkorswim, your charts will most likely look something like this, very plain, very basic, nothing's really going to be on them, all right? So what we then need to do, and the easiest way I found to do it, there's another way to do it, but honestly, the easiest way to do it, once you have your charts pulled up and the tickers in, and as you can see here, we have, let me move this over here. We are focusing on two stocks here. We have, or well, the same one, Apple and Apple, because we want to show you the difference between an exponential and a simple moving average. And we're going to show you the difference between the two on the same exact stock chart. All right, so let me actually move this to a 1-year chart as down here. All right, so now you can see the charts look exactly the same. So the easiest way to add moving averages onto your chart is to go up here to the studies, click edit studies. All right, and then from here, if we want to do exponential moving averages, all you got to do is type in or start spelling out exponential. And then you're going to see it is abbreviated to moving average exponential. It'll be the second one down. Double click that. And as you can see, it provides us with one category here or one input. Well, most traders use more than one moving averages. For me, I personally use 4 or 5. I use the 9 moving average, the 20, 50, 100, and 200. So I use 5 different moving averages on my chart. So for someone like me, and this may not be the same case for you, but for someone like you, you may only want to use 3. So all you would have to do is double click the moving average on my chart. Look, all you have to do is double click once again, and now you'll have 2. But again, I use 5. So I'm going to go ahead and do this another 3 times. There we go. Now I got 5 of them in there. Now, of course, when you double click and input the moving average, it's not going to give you the preset. So you still have to go in and do a little bit more work. So again, like I said, I like 9, 20, 50, 100, and 200. So what I'm going to go is move down to the second one, and I'm going to double click it. And I'm going to move this to a 20. So I'm going to end up inputting 20 here, okay? And I'm going to change the color, because if I keep the color blue, it's going to look the same exact color as my 9, and then you may not be able to tell the difference. So I'm going to go ahead and I'm going to make this one yellow. It works for me. Hit OK. And now you can see that the change, it is plotted to a different change. You can see it says 20 now. So I'm going to go ahead and go down the list, and this is exactly what you would do. You would go down and you would continue to input your moving averages. So this one is going to be 50, if it would ever work correctly, or not. There it maybe goes. No. There it goes. Jeez. All right, so that one's going to be 50. I'm going to put this one as red. And again, we keep going through this process till we make them different. I'm not going to do that. This one's 100 or 11 works too. Good job, computer. Okay, or not. Thanks again. It just, whatever reason, it's being really goofy. So hopefully you don't have the same amount of trouble as I'm having. Jeez. All right, I'm going to make this one green. Hit OK. And we're going to go down here. And then to the last one, we're going to make this the 200 moving average. And I'm going to make this purple. Okay, and the reason we go through and we change them all is or else you're going to plot the same line. And the reason we change the color is if you don't change the color, then all your moving averages will be the same color. All right, and if you're not familiar with what moving average is, it'll become very apparent to what I'm talking about once I hit apply. Okay, now before I hit apply, or actually we can come back to this. I'll hit apply, okay? And now you see all these lines on my chart. Yeah, exactly. You've seen a YouTube video, you've seen someone trading before, and they have all these beautiful, colorful looking lines, and you're trying to ask, well, what are those? Well, they're called moving averages. Either they're exponential or they're simple moving averages. averages. And I'm going to go into the difference between them both in this video. But specifically, now that we have these on our chart, let's say you as a newer trader, where you're like, well, I want to make sure I have these lines on my chart at all times. So whenever I come in and I pull up a new chart, right, I want to have these lines on my chart. So what we want to do is we want to go back into the edit studies. And as you can see, you still have all of them plotted here. What you're going to want to go ahead and do is you're going to want to save this as a set. So you can click Save as Set, and we'll just call this Connor's YouTube video set. Okay. Once you hit Save, okay, you could go ahead and you could delete all these, right? Watch this. Hit Apply. Of course, they're not going to be in the chart just because I took them off. But now we could go right back into Edit Studies, and we could go to Sets. Oh, there's Connor's YouTube video. Double click, Add Selected, Apply, and there you go. Rather than having to go through that whole process once again. All right. So before we talk more about that, let's go down here to the next chart below, where we're going to put on simple moving average. Exactly the same exact step. We go to Studies, Edit Studies. We're going to come in here. Instead of typing in exponential, we will then type in simple. And you can see simple moving average, second one down, double click. Now again, when it comes to simple moving averages, traders like to have more than one average on there. A lot of them will do like a 9, a 50, 100. Some will do, 9, 13, 50, 100. So in this particular video, we'll just do a 9, and then we'll actually do all the same moving averages. That's what we'll do. We'll do all the same moving averages as the exponential we have. And now we're going to go through and we're going to do the exact same thing once again, unfortunately, 20. And we're going to make this one yellow. Apply OK. Down to the next one. This one's going to become a 50. And we're going to make that one red. Apply OK. Next one, we're going to go down here. This one goes to a 100. I'll make this one green. Okay, and the next one, 200. Purple. Okay, and now before we go any further, let's just go ahead and save this as a set as well so we don't forget. And we can land this Connor's YouTube video set number 2. All right. Hit save, and okay, now we're good. So as you can see now, there are now almost the identical looking moving averages here. They almost look exactly the same, do they not? All right. So there is a difference between simple moving average and exponential moving averages. So for those of you that are still tuning into this video and you're watching, most of you are probably a little bit newer to trading. To break it down as simply as I can, and again, I've been trading for a long time, so to break it down as simply as I can in the manner you're going to understand, this is the way we put it. Exponential moving averages in comparison to simple moving averages tend to follow the price action being the candlesticks or the chart moving, right? That's price action. The exponential moving averages follow or tend to follow closer, or they react faster or more significant to the price action. So what I mean by that is the way that they are built, or you could say the equation that's built into the exponential moving averages, and we're not going to talk about the equation because there's really no need to talk about it. Ideally, the way that it is weighted, the exponential moving averages, you could say, are almost weighted a little bit heavier. So any movement in the stock, the exponential moving average will tend to react faster. Okay, so if the stock goes up, your exponential moving average will obviously follow, but it will follow faster than a simple moving average would. So exponential and simple are almost the same thing. They look exactly the same for the most part, but the difference between the two, exponential and simple, exponentials are weighted a little heavier, so they react faster to price action on the chart, whereas a simple moving average, it does not react as quickly as an exponential moving average. Okay, so let's look at the chart here. We'll look at we'll look at a 5-day, 5-minute chart here, or should we do a 1 day? We'll do 1 day, 1 minute. There we go. And then we will also do a 1 day, 1 minute down here. And now we'll zoom in real quick, okay? So I'm not sure if you can notice the difference here. You might be able to. Yeah, maybe, okay? So I'm not sure if you can see this, but let's focus here. We're gonna focus on the blue line. So this blue line right there, that's when we're focusing on, that blue line. And then we're gonna focus on this blue line right here, okay? So this is the 9 moving average. 9 moving average, it follows very closely to the stock chart's price, as you can see. So if we were to draw over that blue line, you can see that the blue line follows very closely to the candlestick price action, whereas it's almost always riding it, right? Like riding right on the direction and the trend at which the price is moving, okay? So the difference here between an exponential and the moving average, if you haven't noticed already, it may be a little hard for you to notice, but very slightly look inside here, right? Like look right there, right? Then look right, right there and right there and there. You notice any difference? You can see that the exponential moving average is a little bit more aggressive, and you can see that it spiked right there, then it went sideways and it spiked up and then it kind of pulled here, and right now we're not necessarily paying attention to every little detail, but if you look at the 9 moving average here, so this one down here is simple, so this on the bottom is the simple moving average chart, and this is the exponential, and let's do EX, right? So this is exponential, this is simple. Let me delete all these drawings. Now you'll notice that the exponential moving average here on the 9 moving average, the blue line, it moves a little bit more aggressively and it reacts to the price action much quicker than does the simple moving average here. And you'll notice that the trend here, or the blue line, tends to follow the price action a little bit more aggressively and a little closer than does the 9 moving average on a simple moving average, okay? So let's recap and repeat. Exponential moving averages, they react quicker and faster to price movements on a stock chart, whereas a simple moving average reacts a little bit slower to price action on a stock chart. Now, again, you can use both. You could use simple moving averages, you could use exponential moving averages for day trading, okay? Now, in my personal experience and preference, I use exponential moving averages for my day trading. When I'm looking at stock charts on 1 minute and 5 minute charts, I'll tend to use exponential moving averages. That's what I used when I first started. That's what I came accustomed to using for day trading. And it makes, in my opinion, a little bit more sense. Again, it's still preference-based and opinionated, but in my personal experience, it's a little bit better to use the exponential moving averages, because when you're day trading and you're making quick decisions, essentially you want the best read as possible. And for me, the best read is a moving average that reacts to price action very quickly, or the fastest, whereas a simple moving average does not react to the price action as fast as an exponential moving average. So when you're day trading, you're looking at getting in positions in a matter of seconds to minutes and getting out in seconds and minutes. You may want to use exponential moving averages because they react to your price action much faster than a simple moving average. Not much faster, but they do. All right. Now, simple moving averages, the way that they are weighted, they're weighted to follow the price action, but not as aggressively. Okay. So you're not necessarily going to be seeing them, right? If the price goes up and then the price comes down a little bit, you're not going to see your simple moving average show that little move down, right? It might just stay completely still. So let's look at the simple moving average. So if you look at this blue line here from the top, this is the exponentials. If you look at the blue line down here at the bottom, you can easily tell that this blue line here is much more aggressive, where you can see that it has these little kind of like little jerks in it, versus the simple moving average. It's a little bit more, shall I say, simple to read. It's very fluent, very smooth, whereas this one's a little bit more aggressive and a little bit more jerky. That's because the way that it's weighted, as soon as the price goes up and say the price pops down, this moving average is going to move down. Whereas the bottom chart, the simple moving average, if the price goes up and then comes down, the way that it's calculated and weighted, it's made so it doesn't immediately show a little pullback on the line, okay? I hope that makes sense. All right, so that's the difference between your exponential and simple. Is if exponential is weighted aggressively, simple is not weighted as aggressively. Now you may be asking, why would you want to use simple moving averages? Well, for some traders, they like moving averages to move a little bit slower and to react a little slower, because essentially it's more of a patient moving average where every little movement in the chart isn't going to affect the moving average. And the moving averages are there to help you understand the trend and direction a little bit more, okay? That's what the moving average stands for, hence moving average. It's average move, right? So the moving averages are supposed to be there to help you kind of understand trend, direction, things like that. And so for many traders, they like the simple moving average because it's a little less aggressive. It takes a little bit more time to essentially, you could say, develop. Now, personally, if you're going to be doing swing trading, you should use something like simple moving averages, because swing trading is a more patient approach to trading, where you're going to be waiting a little bit longer for your setups to take place, and you have to be more patient. So your simple moving averages are or will essentially give you a better read on things like swing trading. So when I do any of my swing trading, I will use simple moving averages, and let me show you. If I went down here into my edit studies and I pull up my sets, you'll see there is a one for, I think, swing. Yeah, here you go, swing trading, right? And if I do that and hit add selected, you'll now see that, oh, well, that doesn't really help you. But yeah, I have simple moving averages already preset, okay? So that, you know, if I want to do those, I have my simple moving averages, all right? Now let's look at like a 1 year chart, maybe see if there's any big difference here. Probably not because of the time frame, but let's zoom in here maybe. Yeah, I mean, I guess it doesn't really kind of show you too much more of a difference. I mean, for this example, there isn't too much to look at, but again, that's the gist of it. Or actually, maybe right here a little bit. Yeah, this is actually here's a great example. Okay, so look at this dip, right? Look at this dip in Apple right here. Okay, you can see with the dip I'm talking about is this move down, right? And then look at the move down here. So look at the moving average here, right? The blue moving average. You can see that the blue moving average is much more still, and it's not as aggressive as it is up here. You can see up here the moving average follows much closer to the price action, whereas the one right here does not follow as closely, right? So you can see that the exponential is more aggressive, where it follows price action closer, and the simple moving average does not, okay? So there is a little bit more detail onto how and when you would use moving averages and things like that, but this is a simple video just to break down the real big difference between your exponential and simple moving averages. So to wrap it up, if you're doing more intraday, day trading, quick trades, my personal preference is exponential moving averages, whereas if you're doing swing trading, a little bit more long-term trading, overnight holds, weekly holds, few day long-term positions, things like that, I would probably be opinionated or more biased towards using the simple moving averages. So I hope that video helps you guys. Please remember to give me a like, subscribe, and share if you see that this video has any value. And remember to check the description box below before you head out, as that's how you can join into our free stock trading chat room, our live trading group, our Facebook group, and basically everything to stay connected with Boiler Room Trading. So I will see you guys on the next video, and stay green.